All right. Hey there, everybody. Today we're going to take a look at Bitcoin, what's going on with it, why it's holding, why it may not break down. And if it does, where we're kind of looking, we'll take a look at the DXY. We'll look at some Bitcoin adjacent stocks as well as, the S&P, things that we normally do. I've got a few extra special charts there. And we're going to talk about the new home of Texas West Capital. So you guys be sure to tune in. All right. See you guys in a minute. All right. Hey there. Good morning, everybody. Christopher Inch with Texas West Capital coming at you live here on Friday, the 8th of September, 2023 from just north of Houston, Texas on Lake Conroe. Hopefully you guys are doing all right. We are hot in Texas. I'm telling you what, almost every day last month in this area was 100 degrees or higher. So, it's just been a heck of a time. Anyway, hey, trying out a new intro there. Let me know what you think, guys. We'll see if we start doing something, a little something. By the way, hey, listen, if you are following me, great. If you're not, please do. We simulcast here on Twitter, Facebook, YouTube, Twitch, everywhere else. So follow us, subscribe to us, hit the like button, leave a comment, all that great stuff, guys. Because listen, at the end of the day, if you like what I'm doing here, it's a quick thing that you can do to help us get seen a little bit more, the algorithms and whatnot, taking care of that, right? Man, oh man, yeah. Ilya here talking about it, says, so excited about the new platform. Yeah, guys. Texas West Capital, you can see here in the right here below. I can't get my fingers. There we go. Right about there, right? If you look at that scrolling banner there, it'll tell you that we do have a new home, and soon you'll be able, all the web addresses that we've had, TexasWest.capital, TexasWestCapital.com, HowToTradeToWin.com, CryptoTraderEducation.com, all this stuff. We finally got everything under one roof, guys, everything, one platform. So if you've got courses from us, whether they're free or paid, if you subscribe to one of our service or whatever, now you can get it all in one place. So those of you that have these multiple things are going to find this much easier. It's one login. It's one simple thing. It's an amazing platform. Gives us all the functionality, including real-time chat that we had with Discord and so much more. And what it's actually going to do for me is it's going to take away a lot of the wasted time, the hours a day that I have to deal with member management stuff and issues that are coming because we were trying to combine everything, make it all work together. It just really wasn't. And so that's going to leave me open to do some extra things. So with that, if you guys check it out there, you'll see our base level now to just get acquainted with us, to get your feet wet with us is it used to be $50. It used to be just Bitcoin. It's $11.99 a month now, guys. Absolutely insane. And you get intraday updates for Bitcoin, you get intraday updates for the Euro USD, and you get intraday updates for the S&P. So whether you're a stock trader, a crypto trader, or a Forex trader, again, you can kind of get your feet wet with us. You can see that we're not scammy, that we're really serious about what we do, especially the education part of it. And I think it's just going to be a great overall experience for everybody there. We're finishing up everything else on the higher levels. So soon we're going to have the, if you want to, we're going to have a lot more ways for you to get involved. You can just pick if you want certain spaces, what we call channels in Discord, or if you want a package that has a lot more. And that way it gives you, it doesn't force you guys into one mold. It allows you to choose what you want. Do you just want to learn Elliott Wave? Do you just want to learn Wyckoff? Do you just want to learn price action? You can get them all together in a really, in a great package, or you can just do them separately. So again, really just putting all the power back into your hands. I told you earlier this year that I was serious about getting out there and really making a difference with you guys and helping as many people as possible. And that's what we're, headed for with this here. So we're just now starting to get some members over there. So, we've had a few people join in already. It might be like a ghost town there, but the way I described it was, hey, listen, if you've been in snow, right? If you've been in an area where it snows and you're home during the day when everybody's at work and everybody's at school and it snows really well and you're the first person to step out there and put your footprints in that snow, right? It's the same thing on the platform here now. You can be the first person to jump in there and say something. So the other thing we'll have also with that level is we'll have at least one interview a month with a professional trader, market psychologist, a trader psychologist, macroeconomist, and whatnot that you guys, you're going to see just there. It won't be out on YouTube or anywhere else. It'll just be in there for you guys. And looking to add even more to that, that inaugural kind of that lower level there, that first kind of get your feet in with us level. So anyway, really exciting. One other piece of thing that I have to get figured out here. If you've joined the 30-day quick start trading bootcamp, I sent out emails yesterday to you guys with the link for to join in today with our call. And so make sure you register on that. Even if you can't make the live, you'll be able to see the recording of it afterward. It'll be on demand. And of course, you can send me questions that you may have after that. But we're kicking that in as well. So, man, so much going on, guys. I am so excited. I love the new platform. It is absolutely amazing. I think you guys are really going to love it as well. So, hey there, Data. I see you. Sass McGee is here as well. Andrew Bennett. Scuttlefish, what's up, man? And Errol Quinn is here. And everybody else listening. And great to have you guys checking in with us. Man, so, yeah, I was on Spaces a little bit. The town hall there on Spaces. This morning, last minute thing there, kind of talk a little bit about Bitcoin and what we're doing. And I'm going to kind of show you guys here. I did post a chart on Twitter, X, whatever you want to call it, if you guys have seen that. But we're going to go ahead and pull it up here and kind of talk about what we're looking at with this, right? Because, again, I think a lot of people right now are really, it's at this point, you've probably, if you've been still online here and looking around on social media, you've seen people talk about how we're at these one of the lowest ever volatility levels for Bitcoin. And, this is what happens, after you hit that bear market low, you get the rally up, and the first rally up, everybody's thinking, oh man, this is a dead cat bounce. It's going to drop all the way back down. And then at this point, we've been going sideways. I mean, if you're looking at the chart here, we've been going sideways here, guys, basically since this over here, March, right? Mid-March through now. So what is that? That's April, May, June, July, August, going on 6 months, right? And what happens in this kind of time, even though it's a decent sized range here, it's basically 25,000 to 32,000, right? It's a pretty decent sized range, but ultimately we're just going sideways. And what that does to market participants, it's not unique to Bitcoin or anything else, but, market participants just become quiet, right? Either they think we absolutely have to go down, or they become ambivalent about that. They just kind of bored and they give up. They're like, screw it. I'm tired of dealing with this. We're not going anywhere. We're not doing anything. I'm bored. Because most traders come in thinking, oh, I'm going to get rich overnight, right? And if you don't, they don't, because there's no patience, right? And if you don't, so they get bored and, oh, it's a scam, or, oh, Wall Street's taking my money, or whatever it is, crypto whales, all the silliness, right? But it's really a product of impatience, right? Lack of patience and not understanding what's going on. So the important thing about this chart, guys, this is the daily chart. The important thing about it is this right here, this mid-August 22 swing high, okay? And if you guys will recall, when we were down here, I said this was the level we needed to get above. And I said not only with crypto, but it's the mid-August swing high with stocks as well, with the stock indexes as well, right? And the Dow hit it pretty easy. The Dow broke out, what was it, like January or so? And then the S&P and NASDAQ just a few months back finally broke out above it, right? But that's always been like the level. You'll notice, guys, that we've hit, it was the support previously, and then the resistance, and then the resistance, and then the resistance, and then the support, and now this larger range of support here, right? And so that's kind of where we're at the moment. Now, what does this mean? Well, what I've written down here, it says it's the large professionals that move the market. If you guys don't understand this, listen up, okay? Retail traders are the liquidity for the moves, okay? Retail does not move the market. The big volume moves are the big players, okay? And they do that by coaxing you in to sell or buy at certain levels, right? Because it's all about human psychology, right? We know that if we're playing this for a while, if you've been in the markets for a while, hopefully you begin to understand how that works, and that humans are quite predictable. That's how we can forecast price movement. That doesn't mean we'll always be correct. Of course not, right? Because we're humans as well, and sometimes we'll miss things, and sometimes we'll misunderstand, bits of movement in the market. But I'm telling you now, the news is always in the markets, right? The news happens. When you think about news is usually like a shorter term movement, right? So you can think right here with the grayscale thing right here. And then we had this little pop right here, which may or may not have been related to the accounting rule that changed here for crypto. They said you can use fair value accounting now, right? Which is huge if you're if you're a company or something that wants to hold Bitcoin on your books. All of a sudden it becomes much less non-attractive to do so, right? Because before, the way you were doing it, you had to mark it down to those prices when it dropped, which affects the valuation of your company. Lower valuations of companies make it more difficult to issue debt, to bring on debt, stuff like that, right? But with fair value accounting now, you don't have to do that. And so it's great. Now, this rule, they said, is going to pass, is going to come, full on in 2025, but companies can choose to use it now. Without really going into it, some of y'all may be CPAs on here. You understand what I'm talking about. It's a huge deal, really, right? And that may have accounted for this bit of a pump here, a little bit delayed, but we got it. And then we got shot back down, right? Now, here's the thing. What we notice, okay, again, we talk about that retail is the fuel, right? And what do I mean by that? Retail does not work together in a group, right? Jim doesn't call John, who calls Sword, who calls Mark, who calls Nevlusion, who calls Aeroquin, who calls Scuttlefish, who calls Andrew Bennett, and you guys, and it goes 100,000 out, and you guys don't pool, don't all decide that on Friday, at 10 a.m., you're going to all buy at the same time and make price move, right? But your bigger players, they scale in with much larger amounts, right? And that's why the Wyckoff method is such a great method to use, because it allows us. The one thing big players can't do is hide their footprints. That's that big volume spikes that come in, right? Those are the big players buying or selling. It's not the market jumping in. Now, does it continue on? If it continues on, it's the market jumping in, and following through, whether it's up or down and carrying on. But that initial push or that initial sell is going to be the big players. Okay. So why is that important? Well, because again, these big players use retail as liquidity to make the moves, right? So they need you to fill in their buys or to buy what they're selling, right? And they dump it on you hard if they're selling, which, overcomes you and pushes down, right? And then at some point, if the market's bearish, they go, oh my God, and they jump in and go short. If they're trying to go long, you're selling into them. Price isn't going any lower, right? Price continues to get bought up, right? And then all of a sudden, your retail generally is not left with enough supply to really stop it anymore. And all of a sudden, you get the big moves up, right? This is what happens. So, this is it's a real simplified explanation of what happens, but that's really what happens there. So, because we continue to see this support in this really strong area, right? By the way, you can notice it is the low volume node over here, right? That's this indent on what we call here the VPVR, right? Your volume by price level, right? It tells how many transactions volume wise that you're getting at each price level. Low volume nodes generally hold as support and resistance until they push through pretty strongly, right? So it's possibly, especially when you zoom into the smaller time frames, you'll get a dump up at the top, but then no follow through coming down. And then you'll get a buy at the bottom, with the volume here, right? Which keeps it from going any lower. And so what we're getting is these big, this demand showing up here at these lows, right? Get it right here at the low, boom. Right over here, moves up. You had this rally on up, which got rejected, comes on down. And again, you had big volume there at the lows and then no volume, right? So there's no follow through. There's been no follow through. Here we go up again. You get the volume rally up to the top there, pushes down. And, that's kind of where we're sitting. So when you're looking at that, right, when you're looking at that, you go, okay, well, there's a narrative. There's a possibility that what is actually going on, because it keeps happening at this significant level. And we're not getting a breakdown yet, which suggests that it's possible that your bigger players are kind of accumulating down at those lows there. And so basically what you look at is all these price movements when you get to the lows or the tops of the range are challenges or they're tests of the market supply and demand. That's what they're doing in these areas, right? Contrary to belief, big players in general don't make the market do what they want it to do. Okay? Big players just, the big professional players just have a better understanding than you do of what's going on in the market, of human psychology, the way things happen. And they target those levels where these expectations are of the market jumping in or jumping out. Okay? And that is the market, though, that carries price through. Initial push is by the big players, whether it's selling into you or buying what you're doing. The question then is, it's a test. It's a test that does the market continue to sell down or does it continue to buy up? And that's what they're looking for. Is the market's letting them know. They're testing the market being, basically retail, smaller players, even smaller professionals. But they're kind of telling what's going on. And these bigger players then kind of look at that as it happens, and they continue doing that until the market shows them really kind of what's going on there. And so that's where we're at, guys. That's all we're doing right here. Excuse me. And so, again, we continue to hold at this place. Now, does that mean it can't break down? No, it doesn't mean that. Of course not. And if it does, maybe 23.5, you've got this higher volume node here. Potentially even 22,000 gives you this low volume node here, right? Potential targets on the way down. But I tend to watch pivots. And so you can see that right now on the daily, right? We're just kind of sideways between the pivot and the S1. So ultimately, here's what I'm looking at, guys. Here's what I'm looking at. Do we break out impulsively above this daily pivot here, right around 27,200? If we can break impulsively above that, then we're likely to take out this swing high, which means we're likely then to continue up and make a new high. Okay? Because once we take out this swing high in the middle here, it'll move us up into this 29,000-30,000 area. And that puts us up pretty high up into, the retracement here. Again, the idea that this is an ABC coming down gets us above that wave B at around 30,200. And that should open up the move higher, right? Or does it break down? Now, if it breaks down, again, we talked about much lower here, but don't ignore the daily S1 pivot area right there at around 24,000. Because, again, if I'm just playing pivots, everything else out of the side, if you're just trading pivots, this is what you're looking for. Do you get the impulsive breakout above the pivot, or do you get the breakdown below the swing low and find support at the S1 pivot? That is your initial play on this. And if you hit that S1 pivot and you bounce, well, now you're looking for a breakout above this swing high here at about 26,460 or so. Because if you hit this S1 and you break out above that, then the odds increase quite a bit that you're going to break out above the daily pivot. You still have to do it, but your trading is about probabilities, guys, not guarantees, okay? And so that's what we look to doing, okay? I really hate when people come in here and try to spam the channels with stuff. Not a great way to do business. Jeez, always. But anyway, so, as long as this level here, this 26,000 level, as long as this continues to hold this support, I think as traders, you need to be cautious. Don't assume it has to break down. It may, and you've got targets lower, but don't assume it has to, because what usually happens is people get caught. And when, more and more people are expecting it to do a thing, often it does the opposite, right? And what that means is the market would get caught off guard and price would move up pretty rapidly up into there, right? And so really that's what we're kind of looking at with Bitcoin here. It's this level here that we're watching. And then locally, do we break out impulsively above that daily pivot area, or do we, drop down and find support at the S1? We don't have to find support at the S1, but do we, that 24,000 level? If we do, we rally back up. Again, we look at the local swing high here. We still need the breakout above the pivot, but if we're getting that, then all of a sudden it looks good for a rally up toward the top of this, 6-month range and popping out even higher, right? So that's where we're at. Nothing that happens, even if it was to break down toward 23,000, is, bearish being, oh my God, it's the end of the world, whatever, It's just, guys, look, right now we are still, what, 50, 55% up off last November's swing low. And people are calling it a bear market. It doesn't make sense. We've rallied up 100%, right? We're just pulling back right now. But a lot of people that you're going to see online don't have a lot of experience with markets. And so, and this is not meant to be disrespectful or anything, but it's meant to be realistic about the way that they look at it, right? And so what they do then is that they assume a bull market begins at the new all-time highs, right? Or at the previous all-time highs, or pretty close to it. But that isn't the way the bull markets begin, right? If you do that, you miss all that rally up. It's not a bear market until the new high. That isn't how it works, guys, okay? So for now, I mean, that's all we're looking at, right? There's no reason to be overly upset unless you're trying to play the 5-minute time frame and getting, wicked out left and right. And you shouldn't be, especially if you're a newer trader. I'm going to tell you right now, guys, one of the things that will help you as newer traders is trade a larger time frame. If you don't really have a lot of experience or a lot of success at trading, and what I mean is about consistent success, right? Doesn't mean you're going to win every trade, but if you're not consistently increasing your capital account, then you should be at the daily time frame. I'm telling you guys right now, there's a lot less noise. There's a lot less up and down. Locally is a little bit, but you have those larger kind of targets that you need to move through, right? Those validation and invalidation levels, and you're not going to get chopped up. If you're watching the daily here, well, you're looking for the breakout of this swing high up here, right? Right up there at around 28, 128.2, right? You're not going to get chopped up in this area because your time frame is bigger. You're looking for a breakdown below the swing low. If you're not getting that, right, then you're not really worried about it. But the problem is traders tend to get really, retail traders, again, as I said, tend to come in looking to get money, to get as rich as possible, as quick as possible. But where does that get you, guys? Be honest with yourself. It usually gets you to lose money, right? And we know this is true because 95% of new traders or whatever are out in the first 3 months of entering the market. So you don't have to believe me, but the empirical evidence is there, right? It's there. And why do they do that? Because their expectations are not realistic, right? And I think that unfortunately for y'all coming in, your first time trading, being the crypto market, unfortunately, I think that really kind of screws you over, right? Because if you're just getting in with the crypto market and people are out there, whether they're being truthful or not, a lot of them are, guys, but they're talking about these big, huge gains and wins that they get all the time, right? And you think, oh my God, I should be able to do that so easily, right? And you start comparing yourself going, well, man, I'm pretty smart. I'm an engineer or, whatever. I'm not an idiot. I should be able to do better than him. He doesn't even have a college degree. And he says he's making all this money. There's a lot of psychological wrongness in all that thought there. But at the end of the day, the reality of it is it makes it difficult as a new trader to come in and be realistic about what you're looking for, right? But if you are not consistently profitable, you should be on the daily time frame or larger. You should not be zooming into the 1 hour, the 4 hour, the 15 minutes. You sure as hell shouldn't be down in the 1 to 5 minute. And anybody's telling you that you can trade, especially at really short time frame, and you can learn to trade it overnight, or in a week or whatever, they're BSing you. Because most of your losses in trading is going to come from here. It's going to come from what's going on in your head, which creates those emotions that cause you to do things that you shouldn't do as a trader. And no amount of showing you some system or some way of trading is going to change that. And you need to hear this. You need to realize this, okay? If there's one thing I can help you with right there, it's that. It's that understanding right there. And beyond that, then secondly is obviously proper risk management, right? Because the only thing you control in the market is how much you lose. So right now, that's why we're looking at where we're looking and how we're sitting. Let me see here. Locally here, again, I'm just kind of looking at this right now as 1, 2, and then potentially, maybe 1, 2 here is a flat. There's different ways of counting this. Could be 1, 2 here. And then maybe 1, 2 with it's a really low pullback, right? But it's still held. And looking for the breakout to 3. If this count is correct, then wave 3, this local 1, 2, 3 here has a minimum expected target of the weekly R1 pivot right around 38,000. Okay. Secondary target right up there around almost 41,000, 40,970 or so. If we do drop on down further, then we're just going to look at this. And as potentially, 1, 2, and then 1 with an A and a B. And then, this would be basically 1, 2, 3, 4, 5 here is a C. And that gives us just a flat correction right here. Again, nothing bearish about it. It's just a flat correction, right? Which would get us potentially, around 24,000 or even 23,000 here, before we look for that rally up, and in that case, it depends on how far we pull back here. But, again, it would just be that kind of pullback. And we generally, let's say we pulled back here to this high volume node around almost 23,000. I mean, all of a sudden we're looking at a 1, 2, and then a 1, 2, 3 up here at around 48,500, which gives us 57,920 is kind of this 1, 2 wave 3 target up there, right? So, I mean, this is kind of, if we do that, again, I'm just trying to show you guys that it's not the end of the world. It's not like, oh my God, everything's lost and we have to, we have to retest the lows. We could, but, it doesn't mean we have to. It sure as hell doesn't mean we have to drop down to lower lows like a lot of people are trying to tell you for the last 6 months, right? Could it happen? Sure. But there's a difference when you're trading between what could happen and understanding that it may not, right? Understanding where you need to watch and how you need to look at price action as it develops to get a better understanding of what may be going. Okay? Trading is simple, but it's not easy. And most of the not easiest about it is because of you, right? It's because of your emotion. It's because of the psychology of what's going on that causes these emotions to come out. And you do things that you shouldn't do as a trader. That's what makes it difficult. Anybody can learn the different systems to trade: Elliott Wave, Wyckoff, ICT, any other, classical trading patterns, stuff like that. Anybody can learn that. It's not difficult, guys. It doesn't take a high school degree, much less a college degree. But what takes the work, what's going to make the difference in whether you're successful or not, honestly, at the end of the day, is, are you mentally prepared to do what you need to do? Is your mind where it needs to be? And for most people, it's not. But the good news is you can get it there, right? And that's what I talk about a lot. Let me see here. Hey, I appreciate you, Randall. Good to see you checking in. Mark's here as well. Fibbo's here. If you guys haven't seen, say hi to Fibbo. Rack his head, rack his brain. Spiral Architect Soren's here as well. Mark, good to see you guys as always. So, I mean, that's all we're kind of looking at here, guys. Right now, we're just a bunch of dojis. One other way to look at this right here, let me explain. There is a chart pattern called a checkmate pattern. And generally what it is it's a big candle down followed by a bunch of dojis, and usually results in a big candle back up. Now you may go, okay, it's here. This doesn't technically fit the definition because your furthest move, your extreme, should be the big candle wick, right? In this case, it is. All these other dojis are up higher, right? In here, you've got two candles that kind of reach higher. You get the same kind of effect overall, but you notice there is an overlapping thing before you get the big candle down, right? But a checkmate pattern is basically, in this case, the trend is down. It ends with a large candle at the bottom with a big wick. And then you get a bunch of dojis with wicks that are higher up than that low. And basically then it rallies up, big candle back up. Now that may be playing out here. We don't know until it actually does it if that's what's happening. But understanding how the pattern works can keep you aware, and it keeps you from going, oh my God, we definitely have to, drop down. Now you can go, okay, what are we looking for now to kind of give us some more support for the idea of what we may think may be going on. Does that make sense? Let me see here. What's going on here? 3-day death cross. What's up, man? What's my opinion on ICT? So, I know ICT, you guys have been around. I've been doing this for, almost 3 decades now. I've learned, I would venture to say, most systems of trading out there. And the one thing we find out with most of them is there's not a lot new in the trading world, guys. A lot of it is a rehash or a different name for ways that we've already looked at things, right? You can get patterns in trading that are just previous, there are other patterns known by different names, right? ICT's maybe got a little bit extra in it, but really it's just a lot of price action concepts, right? I don't think it's a terrible thing at all. I think there's a lot of good stuff you can learn from it, but you can learn that through any real other kind of way of looking at price action, right? The idea is to understand market structure. The idea is to understand gaps. In ICT, they call them fair value gaps. Old people like me, we've always just called them gaps, right? You're talking about these large candle spreads here, right? So you had, this bit right here is the fair value gap, or again, like I said, old people like me would just call it a gap, and you rallied up through it and kind of filling it in, right? Same thing right here. So yeah, I mean, I don't hate it or anything. I think there's more or less, it's like a lot of other price action trading that you'll find out there. It gives it separate names, gives it different things. It does have a few things of its own. So, you can do that. But the one thing I would suggest to anybody is if you're going to come in to trade, pick one thing and just stick with it. Don't change it every 3 days or every week or every month, right? You should be, and you have to really learn the method, right? So you have to learn it correctly, and then you have to practice it correctly. I would say for a minimum of 8 months before you decide that you do or don't want to stay with it. I know you're like, oh my God, 8 months. Yes. In this world today, everybody wants to have everything quick, fast, and in a hurry, right? And I understand that. But if you're serious about trading, you have to, like any other skill set, you have to put in the time and effort. You have to train correctly, and you have to train for a long enough period of time to see results. Okay. You're not going to become a world-class trader overnight or even in a month, guys. Okay. Learning to trade properly is a journey that takes time. Like I said, I've been doing this, almost 3 decades now. I'm still trying to learn more every day. I'm still perfecting what I'm doing. The minute you start thinking, oh my God, I know it all, or I know way more than enough, is really the day that you start falling behind. Okay. You've got to keep working on it. Look at Fiboswani says, what'd you say here? Oh, let me put it up here. 8 months. Yeah, 8 months is quick. Yeah. Most people, guys, to be honest with you, most traders that end up going on to be trading, to trade decades, it takes them 3 to 5 years before they really start feeling comfortable with what they're doing. And they're really consistently trading properly. So I know you don't want to hear that. I know you're probably thinking, oh, whatever. You're just saying whatever. No, think what you need to think, guys. That's part of the problem, though, as a new trader when you come in, is thinking that way, not understanding the reality of what you're in. But man, oh man, if you can understand it and accept it and really just put your effort into it like you would do anything else. If you are a guitarist or some musician, right? If you play drums, piano, whatever, you did not learn overnight, did you? And if you've been doing it for a decade or more, you're still practicing, still doing it, right? But your mindset is different and you're loving it, right? If you're an artist, a painter or something, right? Same thing. If you have played high-level sports, right? The same thing. And you've all got coaches, right? You've all got mentors. You've all got teachers. But people think when they get to trading that they don't need all that. And yet we're talking about real money here, right? Absolutely crazy the way people's perceptions and ideas change, with trading compared to all these other things, which it's the same thing, but just you've got more to lose because it's real money you're using, right? Fibbo says it was easily a few years for him to learn. He says 1998 to 2004 was a battleground mentally. Yeah, I'm telling you guys. See, Fibbo's saying the same thing, guys. Right? And those of you that don't know Fibbo, I don't know how you can't, but those of you that don't know, Fibbo's actually a chartered technician, right? And he actually is the head in his trading department there at his company. So I mean, talking about a guy that's doing a thing professionally for another company for decades now, right? And he's sitting here telling you guys it took 1998 to 2004 mentally was just really difficult. He had to get over that mental hurdle, right? If you're not willing to put in the time, don't come into the market because you're just going to lose your money, guys. And if you're here, I don't want to see you just lose your money just to lose it. But it all starts and ends in your head. Are you approaching it correctly with the right mentality or are you not? And it takes a while to get to that point. Now, it may not take you a couple years to get through it, But, some people it takes a little bit more, some people it takes a little bit less. But the key is once you get through it, then you still have to practice and continue on with the method that you're using. But what I'm trying to say here is don't pick up don't go, oh, I want to learn Elliott wave. And then 2 days later go, oh, this crap doesn't work. Well, no, you just weren't doing it right. You didn't put in the time and effort required to do it. But when it clicks, you guys, it's insane, right? I have a member who was just sent me a DM the other day, and he asked me, he goes, man, Chris, when you finally get it with trading, he's in our mentor program, and he said, when you finally get it, does it just click all of a sudden? He's like, because man, here's what I'm doing. And basically he had like a 13 or 15 winning trades or whatever over the last week, right? And I can't remember what it was exactly. It was 13 or 15 or something like that. Out of like he just had like a couple of losses in the period. He was like, because man, all of a sudden it seems like I just get it now. And I was like, yeah, that's exactly what happened. You just all of a sudden, it's like you're looking at the Matrix, right? All of a sudden, everything that you've been struggling with all of a sudden makes sense. And, so that's what you kind of, look forward to. And for most people, it's not a gradual thing. You struggle. And then all of a sudden, bam, wow, what the hell, So just hopefully to give you guys some support there, if you're kind of struggling a bit, that's what you can expect, right? By the way, here, notice guys, one more real quick here on the weekly, notice that you've got kind of this bullish divergence. And then, through this week of mid-August last month, and then you've got higher lows here and lower lows here, giving this hidden bullish divergence building up on the weekly as well. So we do have that as well going on there. So yeah, check that out. Why does Bitcoin keep dumping? I explained that in the beginning of this stream, so you can just rewind it, and hopefully it'll give you a lot more insight into what's going on with all that, right? Fiboswani says, oh, the head click is amazing. It is weird feeling that I cannot teach, but you will know when it hits. Yeah, exactly it, guys. It just hits you out of nowhere, and all of a sudden you're not struggling anymore. All of a sudden everything just mysteriously just all of a sudden makes sense. You can't really explain it. Randall, what are you saying there, buddy? He says, I'm new at this and the learning period, but when I first started trading, I got my butt handed to me. So now I'm just listening and learning and start paper trading, and then I'll start with $10. Yeah, again, the biggest thing I can say, he says, until I figure it out. And I said, yeah, at the end of the day, guys, it's about getting your head right. That is your biggest thing, because you can learn everything that it is. Again, trading these systems or these methods is not difficult. It's really not. At the end of the day, you all can learn them. Like I said, none of these need a high school degree, much less a college degree to understand and learn. But it's your mentality. It's what's going on psychologically with you that's going to cause the emotions to show up, which is going to cause you, no matter how well you understand the system, to not follow the system, to find reasons why you're going to get out of a trade when you shouldn't, or get into a trade when you shouldn't. The biggest battleground, everybody talks about, they come in, oh, Wall Street and crypto whales are stealing my money. But at the end of the day, the biggest problem, those aren't your enemies. Your enemy is yourself and your inability to deal correctly with the emotions, to process the emotions and deal with them correctly. And so that's why I always say that, trading is simple, but it's not easy. Okay. But you can overcome that if you understand that you have to overcome it. There are ways to work there. We talk about this every week in the mentor program. We have an hour-long meeting in which I discuss, like last week we talked about analysis paralysis. We talked about what it was, how it affects you outside of the trade itself, how it affects you and what's going on in your life, and how that, adds to all the difficulty that you have trading. And then we talked about ways in which you can work to overcome that. And so, we kind of do this every week, but this is the important thing, right? It's that part that most people come into trading. I didn't understand this when I first came into trading. I didn't understand that the mentality and emotion was the biggest part of it, was the one thing that would keep me from being successful. It took me a few years. You guys that have heard my story, it took me 4 or 5 years to really kind of get in and go, okay, let's get serious about this. What do I actually need to know? And to become humble enough to accept that I didn't, as smart as I was, that wasn't what's going to determine whether I'm successful or not. So yeah. So let's jump on over here to the DXY. Now that you're asking about it there, I see that. So yeah, so DXY, we're basically, this is the weekly pivot here. As you can see, it's a bunch of sideways here. But there's two parts that are of interest to me, okay? One is this range, okay? So this has got a swing high up here of around 105.88, right? And then beyond that is right above it. Let me see if I can get this here. Is this right here. There we go. And let me change that color a little bit there so maybe it's a little bit easier for you guys to see. This right here, right? So you can see that running up here in June of 22, we got rejected at this area. We pulled back. We had the candle sideways on it. As we came back down in November of last year, we found support on it until we broke down. Then we find resistance at it. So it's really this 105.8 to kind of 106.6 kind of area. That's really, at this point, I think we're probably closer than not to getting a rejection. As you can look here on the, let me kind of zoom this out here a little bit for you. On this weekly here, right? We are topped out and overbought. RSI is almost overbought. And we're in all this mega resistance area here. If we zoom into the daily, again, we can look here and go, heck, look at that. We are overbought here on RSI, Stoke RSI. We're near, we're working on getting topped out and overbought there as well. And so, yeah, I mean, if we're looking at that, I think that's just kind of the generic area where we look for that rejection. What you're really looking for is a pullback down below this swing low right here, which is 102.936. That's what you want to see. If you can get a breakdown below that, the odds are pretty good that especially if we're getting rejected anywhere in this area here, the odds are pretty good dropping down through there that we are going to then head down lower, right? If we're actually looking at the larger count, if you guys watched Scott's show on Wednesday, you guys know I show up on that back into the show, talk about some charts. I actually showed this chart. This is not the DXY itself. It is the dollar futures chart, which is just the tradable DXY, right? And I wanted to kind of give you the count here coming off this swing low from back in April of 08, right? And so this is the count. As you can see, it's 5 waves up, right? We've only pulled back just beyond 23.6. Now, that doesn't mean we can't rally and break out higher from here, but generally that is a very, very shallow pullback. And so what that means is unless it really starts showing that that's going to happen, we should default to the idea that it's a wave 2 or a wave B on the way down, right? And we've got wave C still to go. Because what we're looking for usually, if this is going to be a 1 and we get a 2, wave 2 is usually going to, terminate near the wave 4 support area, which is also usually around the 50% retracement. And so here we are, right? I mean, there we are. And so if we're looking at this, we could potentially see this as an A and a B, and then a C still coming down toward that 90 level. Now, again, with this coming off the lows as a 1, it's 5 waves up here. Things are pretty interesting. I mean, you can potentially make an argument for the idea that this is, 1, 2, 3, 4, 5, right? And then ABC, and then ABC, and then 1, 2, 3, 4, 5. And that would make this one hell of a running flat here, right? And then you would see this continue to drop on down through here. And so if you're thinking in terms of, the dollar eventually, and this is anything that happened overnight, probably talking at least a decade out, right? At least, because if you look here, remember, this is 08 here until 2022, right? So you're talking about 14 years on this rally here. This one right here was September of 92. all the way up here to around July of 01. So another 9 years here. So potentially looking at a decade to get that kind of drop where you would actually make a new low, right? But again, if you're looking at this, guys, I mean, this is what it appears to be, right? 3, 4, 5 here, which gives you then, well, kind of change it to this right here, which then gives you, again, the idea that this A, B, C, right? And that would give you, and I'm doing this so you guys understand the bigger picture. Stop wishing and hoping and, dollar has to die right now kind of idea. But I mean, this is really kind of what we're going to be looking at here. And I'm going to have to change this actually. Intermediate there. Minor. And let's see here. This will have to be intermediate, and then we'll just move that up to primary. So, potentially 1 flat as a 2, and then we got a 3, or it's just an ABC, right? So 1, 2, 3 down here. And I'm not saying this is where it's going to, I'm just saying, I'm just putting it down there. Primary. Or again, I think it would probably be, usually it'd be more like an ABC because it's a stable currency for the most part. It's one of those bigger kind of currencies going on there, right? But are you ready for this? Are you out there understanding that this is quite possibly what it's going to be? Change this. There we go. Just trying to get to see this here. Right? So, either 1, 2, which would be 3, 4, 5, huge way down, right? Or it's just an A, B, C, but your C is still going to come on down, right? Your C is still going to come way down here. Okay? Now, again, when I'm looking at this, I think I haven't actually gone in and really looked at this, but it does look pretty clear like an ABC down here. So an ABC up and an ABC down and then 5 up is a flat structure in Elliott wave. See, so if you don't know Elliott wave, if you don't understand these things, you're going to look there and go, what the hell ever? That doesn't make any sense. My emotions say that that the DXY is going to do this, whatever you think it is. When you learn Elliott wave helps you understand that human beings act in a specific way. They're not random. Okay. As much as we want to believe, we're not random. And so that's what makes our human action forecastable, right? So this is kind of where we're at here. And so again, instead of that, instead of just a simple ABC to the 50% here, you're looking for continued movement down, right? And so what does that mean? Well, that means, locally here, the idea that we've got a flat going on here, maybe, right? And so then we'd be looking at this rally here. And really, 1056 is 50% or is 38.2. And on a flat, that's a first target area we kind of look at. You can get a 50% at 107.265, right? Though I think if we're ending up in here, if we break out through that, again, we got 61.8 here at around 108.995, and we could run up into this kind of area here, but we kind of just work it in steps, right? If we're looking at this larger count, we're looking at ABC down here, and we're looking at this here as ABC up, ABC down, and this is 5 up. I mean, that to me is screaming flat and will look lower. That doesn't mean we're going to assume it has to go way down here. As I showed you, we're going to look at potential ABC first. But if we continue breaking on down here, we're seeing 61.8, 70.5, 78.6, and we're getting down here, we're going to start leaning a lot more to the idea. This is 1, 2, and we're printing 3, 4, 5 on down toward, this swing low area as that first wave heading down, right? So, I mean, when you're looking to forecast, these are things that, can really kind of help you out there, right? Fibbo says, I'm not a trader. I am a psychologist. Ha, ha, ha. Steven, what's up, man? He says 12-hour time frame dumpy. 12 hours. 12 hour here. Yeah, I mean, it looks like it, right? We're still kind of holding up right here for right now. Kind of pull this in here a bit. You can see that these previous two 12-hour candles here have some decent volume in here. We're almost overbought here on the RSI. Stochc RSI is topped out and overbought. It dipped down, got bought up. Dipped down lower, got bought up. And so now we want to see, are we going to be able to follow that down lower? See that breakdown. Again, you want to see that move through this swing low here, which just basically happens to be the daily pivot, guys. That's where you kind of want to see that breakdown through. If you can get impulsive breakdown through that, that's going to suggest that this is likely done on the rally here, and we're going to head back down to new lows. So if I'm looking at it, that's, that same area is what I'm continuing to look at. I'm not worried about, the DXY on the 1 hour does this, so other assets have to do something else, right? Yeah. What's going on, Deadly123? Good to see you, man. Steven says, I trade only at levels. And that's perfectly, especially if you're a trader, a day trader, or even a swing trader, that's perfectly, fine. It's, you guys, when you come in, you have to figure out what is not only, do you understand what makes the most sense to you in terms of the way that you're trading and the time frames that you trade, but what's easiest. I see too many people coming as traders and they try to make things much more difficult than they have to. They add tons and tons of indicators, or they look at other charts, or the big thing, especially with crypto, is all this on-chain stuff. And I'm going to be honest with you guys, all this on-chain information is like adding more indicators to your chart, right? The problem is you get too many of them, you get analysis paralysis because you start having conflicting information, and you don't know which one to do, and then you can't even get into a trade, right? And the problem with that is that if you're a trader, you're a trader. Your job is to get into trades. But you have to do so intelligently. You have to do so correctly. And that takes a lot of learning that other side of it, that mental side of it, what you do. Me, I keep these indicators on here because I'm hoping something will maybe help you out. And I try to show the interplay between the different indicators so that you can see that whatever indicators or whatever styles of trading you're doing, they generally tend to lead you to the same targets, right? So yeah. Let me see here. China is now a pivot interest. Do you think the China swap to USD makes the USD strong? Again, I don't really worry about fundamentals. I don't, because again, that's just the problem with fundamentals, guys, is that you have to, first of all, understand the base case, and then you have to correctly decode what that means, right? So there's a lot of fault points in human psychology, especially when emotion's involved, right? That can screw you up on that, right? That's why fundamental traders get a lot of it wrong. If you learn to read the charts, right, and you understand market psychology, trader psychology, and learn to read these charts correctly, you're still going to get them wrong sometime because you're human, right? And you're going to make mistakes. You're not going to read it correctly all the time, but it's a lot easier to learn how to read those charts than it is to learn to be fundamentally correct often enough to where you're making consistent profits, right? So yeah, I don't really worry a whole lot about what's going on with, the Chinese yuan, or what's going on with, other things. When we look at the DXY, the biggest contributor to the DXY's value is the Euro USD, right? Well over 50% of the weighted value of the DXY is the Euro USD trade. So I would argue that that's a lot more important than the USD CNY. Does that make sense? Yeah. So when you're looking at it, that's what you want to pay attention to. Again, when you're looking at the DXY, you have to understand what makes up of it, right? So well over 50% is Euro USD on the weighted index, right? The USD yen is second at around 11.5%, 12%, somewhere right there. And then you get into like the pound sterling against the US, the loonie against the USD, and you and then there's much smaller percentages. But if you just look at what's going on with the Euro USD and the USD yen, that's, effectively 70% or so of the weighted value of the DXY. So, if you're trying to understand the DXY and what's going on there, you can look at those two charts, especially, like I said, especially the Euro USD, to get a better understanding of what's actually going on with the DXY. Fall King Pepe, what's up, man? He says, I trade Ichimoku and I find it difficult. Trading the Ichimoku cloud? Is that what you're talking about? Yeah, again, no matter what you're trading, takes time and effort. But even once you do all that, it really is the mental side of it, right? Do your emotions keep you? Do your emotions make it difficult? And for a lot of traders, they don't keep trading journals. Guys, I'm going to tell you right now, keep trading journals, okay? Especially if you're newer, especially if you're not consistently profitable. Keep trading journals. Mark down the entry, the exit, and the stop level of the price of what you're getting into. And, of course, what you're getting into, what stock or crypto it is. And how much you're buying into it, right? And make sure that when you do that, and you do it at the time you take the trade and immediately write it down. And just be honest about your emotional state at the moment. Are you feeling really good? Are you feeling kind of down? Are you feeling just, Be honest about that. And then if you can remember any significant events that have happened to you over the last few days, mark them down. Say, this happened to me on this day. Did you get in a fight with a loved one and that, upset you? Did you win the lottery? And you're over exuberant, right? I'm going to tell you right now, this is going to be a game changer for you, because when you look back at that journal a few days later, right, and a month later and everything, when you're out of that emotional state, you're going to go, a lot of times you're going to go, especially when you've lost your trade, you're going to, what the hell was I thinking? And you're going to be able to trade it back to, my emotional state. I didn't understand it at the time. I didn't really see how it was affecting me at the time. I did it. And then it helps make you more aware when it happens in the future, so you can correct that. As long as you don't have some visual evidence, right, something written down of what's going on with you psychologically, mentally at the time of your trade, you can't understand a lot of times why you got it wrong, which means you can't change it. And you have to be able to change it. Otherwise, you're going to keep repeating the same mistake over and over again. Does that make sense, guys? All right. So real quick, I want to jump on a couple of Bitcoin adjacent charts here real quick, right? We got GBTC. Check it out, guys. And I'm showing you these because, if you think that Bitcoin has to go down and these are actually rallying, your Bitcoin stocks are not going to rally as Bitcoin drops, right? They're not going to do that. The best divergence you'll get usually is Bitcoin will go sideways while a Bitcoin stock is rallying or kind of pulling back locally, right? But if your Bitcoin stocks are all kind of looking like they may start rallying, you should give some deference and watch Bitcoin, because Bitcoin's holding that support, right? So if we're looking here at this, you can see that we pulled back, we bounced here off the weekly pivot here on GBTC, rallied up, pulled back. We're trying to rally again, right? We're getting a bullish cross in the Stochh RSI at mid-range, looking for a bullish cross on the bullish rally here off mid-range for the RSI. We've got a minimum expected wave 5 of 3 target up at 25.86, and the secondary target at 28.11. Okay, right now we're at 19.25. If we're looking at coin, here's our our Elliott wave and our Wyckoff here. And so especially when you move it out to the weekly, you can see this jump across the creek, the big candles, big volume, right? Pull back to that breakout area here is the back of the edge of the creek, is what we're looking at. You can see we're getting a bullish cross on Stochh RSI. RSI bouncing off mid-range, about to cross bullishly as well. And so again, 1, 2, 1, 2, right? So now we're looking for a wave 3 up here. This looks a bit more like a potential what's going on with Bitcoin, right? Especially if locally we're just doing a wave 2 as a flat, right? And so we've got minimum expected wave circle 3 target at 182.90, right? Or 182.87, right around that area, which gives us then a minimum expected wave 3, right? Wave 5 of 3 up here at around $209. So, we want to see some breakout here, but, again, there's a setup potentially happening here, coming off here. So we just want to see some follow through here. to continue with it up right there, right? Same idea with Riot. In this case, though, it looks like we've potentially got a 1 and a 2 here. Let me check this out. Let me check this chart here real quick. I may actually change this. Yeah, this looks like actually looks like that might be a 3 up there, which then gives us, as you can see, our 38.2 pullback is a 4, right? So what I'm going to do at the moment here is, I'm not going to spend a whole lot of time here changing all this, but I'm going to assume this is a 3 on the pullback. No, that would be all the way off the swing low. Be a 50% pullback on this right here. I'll change it here. $32 would be my initial target I'd look for on a rally here. I've got to get this account changed a little bit, but as you can see here, 50% pullback. What did we do? Sideways on the weekly pivot here, finding support. You know, at the previous, again, look at this. Mid-August swing high, 2022. Remember what I talked about that at the beginning of the program, right? Bitcoin, stocks, whatever. It's this mid-August swing high. There's a support here, right? Boom, same thing. When we look here at Bitcoin, right? Mid-August swing high. Support here, right? GBTC. GBTC a little bit different here. Let me see here. Where's that? Because it had its own set of stuff that it was dealing with. Let me see here. Where's the mid-August swing high, though, just to check it? I don't know. It's all right. It's right here, right? It's the same kind of area. Notice there's a gap coming into it, right? Gap down, mid-August swing high, resistance at it, comes back down, support at it, heads up, right? If we're looking at the E-minis here, the S&P basically, right? Mid-August swing high, right? Same thing. Everything. I keep telling you guys. It was the one thing we were looking for. So come here with the S&P E-minis here. Potentially, we've got we're on a fourth wave here, potentially, right? Fourth wave of 3. And we've pulled back and potentially, an ABC, WX, and then ABC is Y. And we pulled back almost 38.2. So we're looking for a breakout really above wave X at 45, 44 and 3/4. That'll add confidence to the count, right? And it looks like it may be printing a leading diagonal. So it looks like ABC is 1, 2, ABC is 3, 4. Get an ABC is Y. We should expect the first subwave of this next wave up, right? Wave 1 of 5 of 3 here to terminate around where the swing high is. So likely getting a leading diagonal here. Doesn't have to be, but until it proves otherwise, I think this may be what's going on here. And so we'll get a rally up there toward that R1 pivot here on the daily. We'll pull back down toward the pivot here, this descending resistance, right up higher. Now what that means is we'll probably overextend on this wave 5 here, right? So this wave 5 right now is based on the height of what we look to be wave 4. Again, we need the breakout above wave X to kind of add some confidence to this. So it gets us up there. But if we do what I suggested it might be doing, which is a leading diagonal up toward the swing high, and then a pull back down toward, we'll even bring it a little bit lower here to give us a lower target. We're looking potentially up here closer to 49.41, an overextension up there instead of 48.11 and 3/4, up there toward 49.41. So, the idea is up higher right now. Here's the thing. If we don't break out above wave X and instead we just kind of drop down here, this is 3 waves. So we would expect a drop down toward this 42.41 and a quarter, which is a 50% retracement. And as you'll notice here, that's also the low volume node. You can see right now we're caught in the low volume node here, right? Mid-August swing high. We gapped up above it here when we finally broke out in June. We came back and retested the low down here in 18th of August. And so, again, this is the structure that you're looking for in this area, looking for the breakout higher. And this, this count would lead to a new all-time high, right? So as we're looking at this, things are not like the emotional people on online want to talk about, right? A lot of people pontificating about, recessions and the end of the dollar, the end of the world, all this kind of stuff, right? And could happen. But right now, if we're looking at the charts don't scream that, unless you're very emotionally biased to the downside and you're trying to find some way of convincing yourself that it has to go down lower, right? But most of the people that are doing that, guys, have been talking about it has to go down lower if you're in stocks here since October of last year. While you've made this rally up, right? If you're in Bitcoin, they've been talking about it since November of last year as we rallied 100%. And we're still up 55%, right? Again, that doesn't mean that it can't happen, but it means if you're always looking way out there at something much more significant, some much bigger turn without a plan otherwise, and that like dominates all your thinking, you're going to miss the opportunity along the way. And when do you finally get in? Do you finally get in Bitcoin when it's above 50, when it's above 60, when it's above 70? You've missed all the rally from 15 and a half. Do you finally get into stocks when they're breaking out to new all-time highs, the indexes? I mean, you see what you're losing out on by being so emotionally biased one way or the other. So yeah, you want to watch this as you work through it. You want to be aware of what your emotions are and really kind of, because once you're aware of what your emotions are and you're truly aware of it, it becomes easier to understand, okay, what's actually potentially going on with the charts. And then when you learn things like Wyckoff or things like Elliott Wave, you can get a better understanding of what may be happening, especially when things are ranging. And you start looking at some possibilities that maybe you weren't looking at before. Most people don't, right? Most people get very one-sided and say it has to do one thing or another. I think we need to go up, but I think even if we break down, it's just a pullback. But what I think doesn't mean it can't break down and go below 15.5. But there's nothing actually happening. And actually everything else that's happening since that November low suggests otherwise, right? It doesn't suggest a retest of the very lows or even a breakdown lower. So until that information changes, I continue to look at it through the lens of, okay, it's likely to go higher, but where are my validation levels? I'm not just blindly long. I want to make sure that as I'm entering or adding to positions, that they're making their way through these validation levels. Because if they're making their way down through an invalidation level instead, then it means I have to look at those other potentials going on, right? And that's how you trade, guys. That's how you trade. Let me see here. So yeah, so we'll continue to look at that, what's going on there. Again, I've kind of showed this SPY trade here, similar to the, of course, because it's the SPY, right? Similar to the S&P, again, mid-August swing high. Let me see here. If we look at XLK here, this is another chart I'm really liking at the moment. We've got a wave. By the way, notice mid-August swing high. 1, 2, 3, 4, 5 leading diagonal. 1, 2, 3, 4, 5 ends it. A, B, C. Same structure we're seeing across the other trades, right? Mid-August swing high. There's your resistance across it. There, it rallied up to it. Boom, there's the breakout, right? So same thing we're looking at across all these different charts, across different markets, stocks, Bitcoin, and crypto and whatnot, right? If we can break out above 179.05, that adds confidence to this 195 target, which is just wave 5 of 3. A rejection there would pull us back down to this area. And then, that'd be that wave 4, that circle wave 4, and then we pop up higher for wave 5. So yeah, XLK is the Spider Select Sector Fund for Technology. So it suggests that overall technology stocks still have, higher to go. Apple. I see you asking for Apple there. I got to get to you. Just want to make sure I got through my other charts, or sometimes I don't get through them. Let me see here. I'm not sure what I've got going on here. Haven't looked at it in the last month at least. Let's see here. So, okay. Looks like it dipped a little bit further for me here. By the way, guys, I have been a proponent of using, I use logarithmic charts, semi-log charts, right? And so I've always used the fib extensions and the fib retracements here, just as regular. I've recently changed them to click on this button, fib levels based on log scale. And that's what I'm using now. So I've got to go back on some of these charts and change them. I've found that these targets are actually working out these days. And there's no reason not to use it with Elliott wave here. On the lower time frames, it doesn't really change anything at all. But on these larger movements, it gives you a more correct target. So this wave 5 target here, if I've got that correct, there's 215.59. Minimum expected rally up toward that. I think it's wave 5 of 3, right? Maybe just wave 5 here. Let me see. Again, look at this. Mid-August swing high, guys. Again, mid-August swing high. And in this case, it looks like a WXY instead of an ABC, right? But if you'll look, once again, support right in that area, right? Resistance here. You've got this little bucket here holding support. So we've got a 38.2 pullback so far. It's potentially 1, 2, 3, 4, 5. We'll have to see if we get a rally up off this daily pivot. If we do and break out above the hourly pivot or the daily pivot here at around 185.5 or so, we should be looking minimally at 215.60, that area there. If we do continue to break down, we want to look initially at the 50% retracement about 168.50. As you can see, again, that's basically that low volume node there almost right here. And then that would be wave 4 there. And then our target would be just a bit higher. So do we continue to rally from here and break out? If we do, we'll look up there. If not, and we instead, you break down here, we want to look at 50% level 168.60 or so, around that area as our initial wave 4 target on the downside. Okay. Gray, what's going on, man? I appreciate you. Thank you for saying kind words there. I'm doing all right. Got a lot going on, a lot of exciting things with the company. So, yeah, and man. So yeah, as far as Apple goes here, what'd you say, Sats? Let me see here. You said, I'm seeing lots of people calling local top for U.S. markets, especially for big tech. Apple might be 3 or 5 waves up. Curious your thoughts. Well, yeah, there you go, man. That's what I'm kind of looking at and thinking there. Yeah, again, with all these things, it's basically, do we break out higher here? If we do, then we're going to the next target on these ones we've been looking at. If not, we'll look at the 50% retracement there. Look for some more movement up, right? Let me see here if we measure this out. Shoot, this might not even be. Actually, if I'm looking at this as a 1, 2 here, this looks like this might just be 1, 2, 3, 4, 5 heading up maybe. I think it's possible this might just be 3 of 3 here. But again, so, this would look like this here. This would be 3 here. I think I'm going to change that. And that actually starts to align with the other. And why am I doing that? Because remember, I changed these, my trend-based fib extension. I clicked the little fib levels based on log scale, as well as on my retracements there. And so, wave 3, we look for the 1618. It's up here, right? This target takes us a little bit above it. That suggests that this is interior wave. And I haven't actually gone in here and counted this or whatever. But yeah, I would look up. This would actually be wave 3 up here at around 215.60 there. And we get a wave 4 on the pullback, and we get a wave 5 up. So again, that now aligns with, we're looking at the XLK here, 5 of 3. We break out, right? It aligns with the SPY, 5 of 3. ES minis, the S&P E-minis here, 5 of 3. So yeah, that starts looking more interesting there. So yeah, now that I've got to go back in and check these charts, I haven't checked in a bit and changed their extensions and their retracements. It looks like a pretty good thing. Oh, but again, guys, yes, it looks like that. But what do we need? We need the breakout, right? So you need the breakout above this wave X here on the E-minis for the S&P. You need the breakout on the SPY. Well, looks like we've already got that breakout right here, though. So it looks like we've already broken out on the SPY here. XLK, we need the breakout above 179.05. Bitcoin here. We need locally, again, we need the impulsive breakout above the weekly pivot above. I'm not sure that hourly pivot is correct there now. No. Above the hourly pivot, and then above the weekly pivot there, and then the daily pivot just a bit above. But really what we need, if we're out on the weekly, what we need initially is a breakout above this swing high here, this pop up that we did, this 28,184 area. We can do that. The odds are increased significantly that we're going to break out higher. So if we can do that, my next step then is the breakout above wave B here at about 30,200. If we can get that, I'm definitely looking much higher as we were talking about with that. Does that make a lot of sense, guys? So I know it may go against a lot of emotional biases. And again, I'm not saying it's going to do that. I'm saying that right now, until something different happens, the information says this is the more likely move. But we will change that as, if new information comes in that contradicts that. But we can't sit here and just keep flipping back and forth because emotions say, right? You don't want to do that as traders. So that's where we are, guys. I think that'll do it. Let me see here. The only other chart I have here is something I showed earlier this week on Scott's show, looking at this prime USD chart. Man, just absolutely fantastic. Tweezer bottoms down here, a couple of dojis, finding support at the daily pivot. So pin bar at the daily pivot, finding support. That's what we're looking for. Impulsive breakout above the descending resistance. Expansion of volume, expansion of candle spreads, exactly what we're looking for. We've got a target of $5.60, and then a secondary target of $6.50, $6.51 if it continues to rally up higher than that. And that'll take us pretty close to the swing high. And so as I talk about, the first subwave of the move up is usually, a little bit below or a little bit above that swing high resistance every way. Okay. Seth says on Apple, what'd you say? On Apple, you called that wave 3 target of 197 back in March. Yeah. It worked out well. We hit some great targets with Coin as well, with Riot, with Mara. We just absolutely, June was just a barn burner as far as, man, just up 60 and 70% on a lot of trades. So yeah. And now we're looking for this rally to kind of continue up. But we do need to see the breakouts, guys. Does that make sense? So there you go. That's going to do it for today, guys. As I said, you can join us over there at the twc-education-hub.mn.co. Again, next week we'll have all our different TexasWestCapital.com, TexasWest.capital, HowToTradeToWin.com, and all that kind of pointed there once we get everybody moved over. But a whole lot of content, a whole lot of info for a very, very inexpensive level, just to kind of get you guys in there, give you something really worth a lot more than what you're paying, and also kind of just introduce you to who we are and how we operate, so that you're not out there going, thinking to yourself, oh, they're just scammy, because all people are scammy or whatever. So there you go. I hope you guys have an amazing weekend. As always, remember, the only thing you control is how much you lose. So please keep working on that risk management. Okay, guys? At the end of the day, the two things that are make the biggest difference for you as traders is not a system. Stop bouncing around from system to system. It's proper risk management, and definitely understanding the psychological and emotional states and how they're affecting you and when they're affecting you. Because if you can do that, then you can use that to your advantage, not just in how you trade, but in understanding how the rest of the retail market is trading. and it'll put you on the right side of the trade a lot more often than the wrong side of it. Okay. But it's nothing that happens overnight. It does take, work and effort and all that. And it's another area of Texas West Capital that we're going to continue to expand on because, the importance is so much and there's nobody really out there doing it. Everybody's trying to sell you some new system, guys. New systems are just same things that people have been doing for years, just with a new name, slightly little different look at it, but nothing that's going to make your life any easier until you get over that mental hurdle, okay? Other than that, again, guys, proper risk management. So that'll do it. Yeah, if you're in the mentor program, guys, don't forget we'll be meeting here in just about an hour or so. And so we'll have a nice, great conversation there. Again, if you're in the 30-day quick start trading bootcamp, guys, we will be meeting at 4 p.m. Central Standard Time. That's in about 3.5 hours. You do have the links in your email. Please check them and register on that. And even if you can't make it, make sure you register so that way you get access to the on-demand afterward. Other than that, I think that's going to do it, guys. Follow me, subscribe to the channels wherever you're following, like it, leave a comment, even if you don't agree with me. I don't really have a problem with anybody that disagrees with me, guys. I have a problem with people who are disrespectful and rude, and I don't really spend a lot of time with that. But if you disagree, that's fine. Give me, help me understand. Maybe I'm missing something. I'm not out here to tell you I definitely know what's going to happen. Nobody should be. But and I like to discuss charts. I like to discuss trading and markets. So there you go. Randall, have a great day. Data, Sats, you guys, everybody else. Appreciate you guys joining in. And one more time, just for the reminder, guys, don't forget that the most important thing you'll do day in and day out as a trader is your risk management. All right? Take care, everybody.